Welcome to the Organized Expat, brought to you by Tytle, the platform for expat taxes. Hi everybody, welcome back to our show. Today we're going to talk about Italy, and that's a country that you can talk about forever. Italian taxes in particular, because they can be very complicated. Sometimes they can be simple or even simplified. We talked about the simplified regime for freelancers last time. So today we're going to talk about tax residency in Italy, and it's part of, let's say, a series of special editions about Italy. So we have this brief general introduction about the Italian tax regime, tax system. So take a listen there if you're interested in a brief and general introduction. And if you're interested in, let's say, more specific topic like tax residency, then you're you're listening to the right podcast, because that's going to be the subject for today. And as always, I'm here with Laurens.
Hi, everyone.
And Laurens, the introduction is maybe already well known, but I'll do it again. He's our big expert in taxes, and especially expat taxes. So, Laurens, tax residency in Italy.
Yeah.
First of all, what is tax residency? Maybe that's also good to discuss that briefly.
Right, exactly. So, yeah, tax residency is basically if Italy considers you a resident for tax purposes, as the word says. So, if you should declare your worldwide income in Italy or not, because tax residents need to declare their worldwide income in the country where they live. And then also it could appear, of course, that more than one country considers you a tax resident. Then you look at tax treaties, what we're not going to do today.
Yeah, we're not going to talk about that today, but just a quick example for people to understand what tax residency is. You're spending your time between two countries, let's say the Netherlands and Italy, and one of those two countries should have the right to tax you on your worldwide income.
Exactly.
And it cannot be both countries at the same, or maybe it could, but then you have tax treaties.
With the US.
Or the US. But the country that can tax you on your worldwide income, perhaps, and that's often the case because you're spending most time there, that's the country of tax residency.
Exactly. So again, you have a tax treaty, and it can happen that two countries consider you a tax resident according to their national laws.
Yeah.
So and if you divide your time between the Netherlands and Italy, it could be that according to both countries' laws, you're a tax residency in either country, and then in the tax treaty. Where we'll also do a few podcasts about
tax treaties, how they work.
And tax treaties, how they work. Basically, one of the two countries is the winner country, but it's not always as complicated. In most cases, people just move to a new country, and that new country becomes their new home, their new tax home as well. But I mean, of course, you have all these edge cases where people work 6 months a year in country X, let's say in Italy. But wife and kids are still back home in
Germany or
exactly.
And perhaps as a rule of thumb, your country of residence or residency where you live is often also your country of tax residency.
Yeah, exactly.
Yeah. So maybe that's the simplest way to put it. Okay, so how does it work in Italy? When do the Italian tax authorities consider you to be a tax resident there?
Yeah, so Italy's rule here is quite standard. It's if you spend more than 183 days in the fiscal year, which is the calendar year in Italy. So it's standard because a lot of countries use this 183 days.
Which is 6 months.
Which is 6 months, exactly.
Yeah, so half a year, more than half a year.
Yeah.
Then we have the winner. Then we know which country.
Exactly. For Italy, and it's not as standard because Italy, the reference period is the calendar year. So they're always looking: do you spend more than 183 days in the calendar year in Italy? And if yes, then they consider you a tax resident for the whole calendar year.
Yeah.
And if not, they don't. So
and maybe it's good to see or to talk a little bit about the two options or the two ways to look at it that you often see in tax treaties as well. You could either look at it from, let's say, any 12-month period.
Yeah.
Doesn't matter. So it could run from October to October or from May to May.
Yeah.
Or you could focus on a calendar year.
Yes, exactly.
And Italy focuses on the calendar year,
Exactly.
which gives more room to play with the rules because,
So, I mean, if, for example, we take another country like Portugal, and if you move there on the 1st of August, then, I mean, this is how it works in most countries, that they just say you're a tax resident from the 1st of August onwards. Before that in your previous country. So in Italy, that's not the case. So if you move to Italy on, let's say, the 15th of July, you will not have been a tax resident in Italy for all of the calendar year.
Because if you calculate the days from July 15th until the end of the year, then you won't meet the trade. So it will be slightly under 183 days.
Exactly.
So maybe 170 or so. So you won't be a tax resident for the full year.
Exactly. And in that country that you left, let's say the Netherlands, because I believe that's the example that we picked, then if you deregister from the Netherlands on the 15th of July, the Netherlands will not consider you a resident or tax resident anymore because you deregistered. So
there is this vacuum, this void.
So from an international tax law perspective, you're a few months without a tax residency. So of course, if you earn some income or if you plan it well, then cases of double non-taxation can arise.
Happen.
But in the opposite scenario, if you move to Italy in March, for example, then Italy is going to consider you a tax resident for the whole year. And if you leave the Netherlands, then if you deregister from the Netherlands in March.
So maybe it's already clear, but in May, then of course, if you're staying until the end of the year and through the next year, but let's focus on this calendar year, then it will be over the threshold of 183 days. So it automatically calculates back, or it takes you back to January 1st because it applies to the whole calendar year, meaning that you will be an Italian tax resident for the full calendar year, but also for, let's say, what was it again? 15 May?
No, I said March, but May is also fine. So for, let's say, March or May, let's say the 2.5 months, if we say 15th of March, you will also be a tax resident in the country that you left. So let's say the Netherlands. So the effect is that you're a tax resident in Italy for the whole year, but also in the country that you left for 2.5 months or 5 months for that matter.
So it's becoming more complicated then.
Yeah, exactly. And I mean, do you get double taxation then? No, not necessarily. In theory, you don't, because there's a tax treaty, and the tax treaty avoids that double taxation. But in practice, it's not as simple, because if you have a big capital gain in January or February, for example, then in principle, Italy will want to tax that, and you can explain why they shouldn't, and that procedure is often quite
but fortunately, the tax authorities in Italy are super lenient, correct?
No, I mean, so they have this reputation of being among the more aggressive tax authorities. I mean, in Europe, with all due respect, of course. So they say that about a couple of countries.
But briefly put, it could be that you are in a lot of trouble, not necessarily because you don't have protection under international taxation treaties or double taxation treaties, but more because it's a lot of practical hassle, because you have to explain to both the Netherlands and Italy what the situation is. And the opposite can happen if you move to Italy after July, because then, or date in July, because then you will not be considered a tax resident in Italy for the whole year. And Italy has this, I think it's not standard procedure. So most countries don't look at it from this perspective. This is more, let's say, this is typically Italian, and maybe for a few other countries as well, but in many countries you won't run into this kind of trouble. So if you're now very concerned as a listener, please note that this is quite specific for Italy.
I mean, there's some other countries, I think Turkey, Czech Republic, they also look at the calendar year, but most countries in Europe, I mean, the systematics there is that if you move to that new country, that is
Yeah.
just the date when you become a tax
Yeah.
resident automatically. It's the date when you register there, for
Yeah.
example. So maybe
Yeah.
also good to mention in Italy, when you arrive in Italy and registering, becoming
Yeah.
a resident, you need to do that within 8 days
Okay.
after arriving at the municipality.
Yeah, the municipio, oh, the comune. Sorry,
Comune,
yeah,
yeah.
exactly. Okay, yeah. So I speak or spoke a bit of Italian, so that's why Laurens is looking at me. My Italian is quite rusty because we with the Tytle we are based in Portugal, and I'm focusing on Portuguese, and for some reason Italian and Portuguese don't like to be together in one brain, I think. And now Portuguese is fighting out my Italian quite aggressively. Yeah. So, is that all we need to know about?
I think that's all we need to know, yeah.
About this, about tax
tax
residence in
residency.
Italy, yeah.
Yeah, and of course, we get a lot of questions about tax residency in Italy because it's also important. Sometimes people have already moved to Italy and ask, okay, should I have moved in August or in June, for example?
And better plan ahead. That's always better than to ask, did I do the right or the wrong thing? But that's quite obvious. But maybe it's good to repeat it. And of course, also, as always, if you have any questions or if our podcast raise any questions or doubts, or maybe if you spot a mistake, I hope not. We don't think so, but if so, then let us know. All feedback is welcome. And also, if you need any assistance, not only in Italy, but we cover more than 30 countries. So you can reach out to us, and we're happy to assist. And I think for now, that was all. So hope to see you again in the next podcast. See you then. Ciao, ciao.
Bye.